All right, welcome back to another breakout watch list video, this one from June 27th to July 1st. In this video, we'll be covering 8 different setups. Each of those stocks either have strong fundamentals, strong technicals, or volume patterns that lead to stronger uptrends. A big thanks to MarketSmith for sponsoring the video. MarketSmith is going to be the trading research platform that we use to break down each of the setups. So if you like what you see and want to give it a try yourself, there's a link in the description below. Here are the 8 stocks that we'll be covering in this video, but before we get to any of the setups, I do want to take a moment to talk about the general market and how aggressive I'm going to be coming into this week. Looking at the QQQs, this did have a nice rally from 270 up to 295 area, breaking through the 8-day EMA, the 21 EMA, but still below a declining 50 and a declining 200-day, and this $300 area where this previous gap has formed. We did see a follow-through day on Friday, technically a follow-through day on Friday. I say that because the volume that came in was heavily influenced by the Russell 2000 rebalancing. So the volume trigger on that follow-through day requirement is a little less credible. We also have a couple groups showing relative strength right now. You have Chinese stocks, solar stocks, biotechs, and EVs. And solar stocks last week did not rally with the overall market, which is a little bit concerning. You did see Chinese stocks and biotech stocks rally up, so maybe that's the strongest couple groups to focus on. But another thing, semiconductors are still right near their lows. Typically, in this first bear market rally, we saw semiconductors leading. So the fact that those are staying pretty low is also kind of a concern to me. So although we did get a follow-through day, although we're seeing a nice oversold bounce through the 8 and 21 EMAs, I'm going to be a little bit cautious coming into this week. With that said, now we can get into the stocks. The first stock that we'll cover is CRDO. This is an IPO stock, an internet network group, 190 out of 197. So the group itself is very weak. Earnings per share rating 76, E group strength rating, B minus accumulation distribution. That should be a little bit higher to improve our trade probabilities. Overall composite rating of 73 and an individual relative strength rating of 89. The last 2 quarters, this did have strong fundamentals. Earnings per share were up 167 and then 200% year over year. Sales were up 136 and 90, and after-tax profit margins improving as well. Within the group of 16 stocks, again, a very weak group, but earnings per share ranking number 1, relative strength rating number 3, and overall composite rating 3 out of 16 there. Fund ownership, we only have 1 quarter to work with, 106 there. But what I do like, we pop on earnings, 200% earnings per share growth. Nice, strong close, 76% closing range. And you can see it tried to rally as the market was just chopping sideways, but then as the market eventually pulled down, we did see a pullback all the way to the increasing or rising 21 EMA. From there, needs to put in a little bit more work, but Friday we closed up 3.1% in the wick of Thursday's candle. So, and over the 8-day, the 21, 50-day, all the key moving averages. So with this, looking for a break over the high on Friday, $12.95, call it $13 as a potential entry point for CRDO. Next stock is CTIC. This is sticking with the biotech kind of theme. So you can see biotechs, 77 out of 197. It's a B group strength rating. This individual stock has a B minus accumulation distribution rating, 56 composite. Composite ratings are always kind of weird with biotech stocks. I really want to focus on the relative strength because that's based on price, and that's price is the only or the most important thing, followed by volume. Relative strength rating here, 99, so obviously that's very strong. Earnings, sales, after-tax profit margins, all negative, so not strong fundamentally. Within the group of 800 stocks, because it has that highest 99 relative strength rating, it is ranked number 1. In overall composite basis, 70 out of 800. Looking at fund ownership, that is steadily increasing from 35 to 39. I guess 37 here is a little decline, but then up to 52. Looking technically, I traded this stock through here, this 505 area. This was basically the only stock that was working through here. And eventually, it came down, stopped me out at $5, had one more rally and then flushed with the overall market flushing, but quickly got through that distribution zone. So I didn't want to trade it while it was sitting through 570 area because we saw sellers come in here, and really shoot it down. But quickly, this regained that area. Didn't really have much of a problem. 3-4 days trading here, and eventually just chopping kind of sideways. Last week, we saw a slight pullback. Again, this volume on Friday, mostly due to the Russell 2000 rebalancing, so not as credible there. But we closed right, slightly below, 0.5% below the 8-day EMA, but above the 21, the 50, and the 200, all rising. Looking for a break over $6 as a potential entry point for CTIC, a biotech stock. The next stock that we'll cover is DQ. This is kind of a combination of themes that we want to be focusing on, Chinese stocks and solar stocks. So it's in energy solar, 22nd strongest group out of 197 right now. 98 earnings per share rating, A group strength rating, A plus accumulation distribution, 99 overall composite rating, the highest that MarketSmith gives. And then individual relative strength rating of 98, also very strong. You can take a look at the fundamentals. Earnings per share, over 1,000, then plus 83, plus 524. Sales are improving, 230, 370, 60, 400. After-tax profit margins, over 40% improvement. That's pretty incredible there. Fund ownership on this did slip in March. We don't have June's just yet. That would be interesting because we have seen some heavy volume, higher than average volume come in as we're rallying from 36 all the way up to 70. So basically a double through here. And then the last 3 days, like I said earlier, solar stocks weren't really participating in the rally last week. ENPH was a stock that was on my watch list that never really got going. Didn't flush either, but just kind of traded sideways. So this first kind of rally through 60, was nice. And then we see basically 3 days of consolidation right around that same closing area. So with this, looking for a break over the high, $69 as a potential entry point. Or if we see market weakness come in and we pull back to either the 8-day EMA around 62 or just come back to this previous breakout point around 60, both areas to watch if we see market weakness. If the market continues to rally, I don't want to see the stock waiting around. I want to see it getting going, because if this is going to be a leading stock, leading groups, combination of leading groups, no excuses for it not to rally if the market continues stronger. Next, we have IPO DUOL, Duolingo. This was a stock that I've had on my watch list for a while. I posted it on Twitter a little bit earlier, but computer software, education, media, 138 out of 197. Nothing stellar about that group strength, C- group strength. But it does have a B plus accumulation distribution, 42 composite, that's very weak. But individual relative strength, 57, also weak. So Nick, why are we talking about this? This is an IPO that's possibly starting to work on the right side of its base. You would see it put in a low, 60.50 here. And then while the market put in a lower low, this was putting in a much higher low at $80. So what was that? A 33% increase in those lows, while the market actually dipped even lower. So showing subtle signs of relative strength while it's working up the right side of its base. Last week, it never closed above 100 until we got Friday's close, which attempted to rally, eventually closed near the low of the day. This is a stock with market. If the market pulls back, I want to see this $100 area kind of get supported. I want buyers to be stepping in, supporting this area. So potential entry point as close to 100 as we can get, with the stop loss either slightly below 100 if we really want to size it up and keep our stop loss very tiny, or below the 8-day EMA, which is about 5% away from current price. Next stock we'll talk about is ENPH, also a solar stock. I mentioned it earlier when talking with DQ. This one is not a Chinese base, so you don't have the combination of strong groups, possibly why it was kind of so subtly trading last week. Just building under $200. I already talked about solar group strength A. This has an earnings per share rating of 96, very strong. Accumulation distribution, because we haven't seen these mega blue bars of volume come in, we only have a B accumulation distribution rating. Ideally, that is higher. We want to see the stock being accumulated. Heavy volume days on up days, low volume days on pullbacks. It's just kind of trending right now. So nothing to note there. Overall composite rating 98. Obviously, that's very strong. Individual relative strength rating 94. Whenever we see a stock with 90s or above on both of those metrics, it's a stock to have on at least a general watch list. Earnings per share, sales, after-tax profit margins, all improving. You guys can see it. I'm not going to walk through that. Fund ownership did decline a little bit from December to March, 1734, 1704. We'll see how June comes in. Within the 21 stocks that make up the solar group, this is number 2 on earnings per share, number 3 on relative strength, and number 1 overall composite. So focusing on strong stocks in strong groups to increase our trade probability. This is one that if the market continues to rally, it's got to stop with this excuse of just trading sideways. It needs to get going. Breaking over $200 is a potential entry point. If we see more weakness in the market come next week, I want to see the rising 21 EMA hold. That is, let's see here, 187. This stock has held 190 a couple times. The low on Friday was 190.41. So that's also an area of potential entry against that 8-day EMA. The 21 is just a little bit lower. So you can keep a tighter stop if we see market weakness come in on Monday, and then you can get an entry as close to 190 as possible for ENPH. Next, we have EVH. This is in computer medical software. So medical stocks have been showing relative strength as well. This, because it's computer software, has been weak. All the tech stocks have been weak for the most part. So 113 out of 197. That's a C group strength rating. A accumulation distribution. That's nice to see. 98 overall composite, along with a 96 relative strength rating. And you can see this blue dot. That means the relative strength line compared to the S&P 500 has hit a new high for this stock, which is always great to see. We want to be, if we're going to outperform the market, we have to be buying stocks that are outperforming the market. So when you see the relative strength line in an uptrend, that's a stock to have on a watch list. Fundamentally, the last 2 quarters, very, very strong. At least the last quarter, earnings per share was up over 1,000%. Sales up 38%. After-tax profit margins up about 4%. Within the group of 35 stocks, again, pretty weak group. So we want this to be outperforming the stocks. This is number 2 relative strength rating out of 35 and number 1 overall composite. Great to see. I do want to go to a weekly chart on this so you guys can see the base. You have this giant base in here. We don't want to be trading anything under here because you have this overhead supply. But drawing the line here, you can see a nice cup handle with a shakeout, couple shakeout days. And now we're right near the highs here around $33. That is going to be a potential entry point for me. So this is one where it's not set up to really get going yet. I want to see it kind of run up to 33, tighten up a little bit, and then get going. But because this is a stock that's in a weaker group, but still right near all-time highs with a quality cup and handle setup, something to watch, EVH. I've got 2 more stocks to cover, but if you guys are enjoying this video, please do me a huge favor and drop a like and subscribe to the channel. I make this breakout watch list video every Sunday along with other trading related videos. The next stock that we'll cover is PLAB, and I don't know if you guys can hear this, but it is raining super hard right now, so my apologies on that. Hopefully you guys can hear it. PLAB in the semiconductor group. So like I mentioned earlier, semiconductors as a group has not been participating in this rally so far. So that is kind of the yellow flag on the setup that I'm going to be covering right now. But if this rally is to hold, not just a bear market rally or an oversold rally, we're going to see semiconductors eventually participating in this rally. And going to a weekly chart, you can see this is one of the few tech stocks that made a brand new all-time high while the market was hitting its low. That's incredible relative strength you can't ignore. So the party got started here with earnings, 188 year over year, earnings per share growth, sales up 28%, after-tax profit margins up 15%. This rallied from around $15.40 up to $23. Since then, it did decline with both semiconductor weakness and market weakness, dropped from $23 all the way down to $18.60. And now we're kind of trading right along the 8 and 21 EMAs. Friday, it had a really nice day, up 6.6% on heavier than average volume. Again, that's the Russell 2000, but back over the 8, back over the 20, and back over $20 with a nice strong close. So with this, if we see market weakness, I want to see this just kind of consolidate, see these daily bars tighten up a little bit along with price or along with volume tightening up. If we see market continue to bounce or to rally, we want to see a break over the high 2041 as a potential, or 2043, excuse me, as a potential entry point for PLAB. And the last stock that we'll cover today is PRVA. This is also in computer software medical, 113 out of 197. We already know that's a C group strength rating. It has a B+ accumulation distribution, a 94 overall composite, along with a 91 individual relative strength rating. Really nice to see. Fundamentals, very strong. We're seeing earnings per share growth, sales growth, after-tax profit margins growth. This is an IPO, as you can see, putting in the low a little bit before the market put in the low, so that's showing relative strength. Let's see, what was the low here? Low on this candle, $17.99, call it $18. And then we put in another low in the market. And while that was happening, while the market puts in its general low, This was bouncing right at the 50-day and the 200-day moving average. So nice to see buyers step in at both areas of the market, but this stock much, much higher than the previous low here. As you can see, the last 4 days traded very tight under $30, so a break over $30 is going to be the entry point for the stock. That is a little bit extended from the 8 and the 21 EMA, so if the market dips and this takes more time building up under 30, that's even better. But if the market's going to continue with its rally, we don't want to see the stock making any excuses. We want a quick break over 30 and then a stop loss under Friday's low, 28.60 there. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading related videos. Another big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the stocks, there's a link in the description below that you guys can try it out yourselves. And finally, if you want to hear more from me, you can follow me on the other social media sites. StockTwits and Twitter are the two that I post the most. I'm Nick_Drendel on StockTwits and Nick Drendel at Twitter. Have a great rest of your week, and I'll see you guys in the next video.